Hey everybody, welcome to Options with Hans. I'm Hans Albrecht, your friendly neighborhood options trader. I was an options market maker for 15 years and an options income fund manager for a decade after that, $1 billion managed. Please like and subscribe down below. If you like what you're seeing and you want more content, please do subscribe, and also grab my free ebook down there as well. I'll have a link for you. In fact, there are two books there as well. I've got my Introduction to Volatility. With these two books, you can go from absolute zero knowledge in options all the way to Volatility Ninja. But of course, remember, this is for educational purposes only. Your trade, your responsibility. And if you're okay with that, let's dig right into one of my favorite themes, one of my favorite names that just won't quit, I think. And I want to show you how to play this thing and make a whole bunch of money. This is kind of urgent because I think we're actually embarking on a new leg to AI. I've been covering AI since 2016 as a portfolio manager, writing articles on how amazing this trend is. Here's one of my articles that I wrote for Wealth Manager. So I've been looking at this stuff for a very, very long time. And we've had these periods. Google was really in the lead in 2016, really had everything. They had DeepMind. They were beating players at the game of Go, which has jillion different possible moves, more moves than atoms in the entire universe, something crazy like that. So AI has been going and going and going. It is not early innings. We're a little bit along the way, but I think this is a moment. This is an incredible trend, and it's starting to actually pervade throughout the economy, and it's going to really improve productivity. So in my view, I think things are actually starting to ramp up again, as they do with innovation. They kind of have these ebbs and flows to them. I think we very well may be at the beginning of one of those mountains. So first of all, we're going to be talking about leaps here, right? The trade at the end is going to be a leap. And I want to show you that that's kind of an easy peasy sort of thing, right? Leaps are short for long-term equity anticipation securities, right? So that's a big fancy name for something that basically is just a call or a put, except with a lot longer expiry date. So typically it's 12 plus months. And we're going to talk about the advantages of options with leaps, but with a lesser impact from those short-term options negatives. So you need to deal with less of the daily time decay. You've got a built-in hedge, which is terrific. You've got a strike price below which you have a hedge. You've got leverage from a leap, which is really one of the primary reasons for putting one on, in my view. There are different ways to use them. And certainly there are puts. You can buy leap puts. I used to do that in my Black Swan funds. So definitely there's the hedging side of the leaps game. But today we're going to focus on the calls that represent an opportunity for one of my favorite stocks, NVIDIA. So these things give you that leverage. Don't abuse it. I'll show you that in a moment. And they give you this amazing thing, which I think contributes to emotional capital, which is one of the things that people kind of forget about sometimes, that emotional capital that you need to preserve as well, so that you can take advantage of opportunity, not get worn out by markets. So it's going to give you time to be right. It's going to give you breathing room. It's going to give you the ability to step back and see the big picture. Sometimes when you're an option trader, you get stuck in the noise, you get stuck in the moment. And leaps are really a great way to kind of bridge that gap between never having touched an option and investing, right? Kind of halfway between some of the advantages of options, but with some of the without some of the disadvantages of the shorter term options game. So they are more expensive, absolutely. So you want to keep these to your very, very best ideas, your very best quality companies. I go over those in all my programs. That sort of foundational part of investing with options is going to start with that quality company and all the metrics that we talk about. So we're going to talk about a really great quality company today, of course, and we're going to talk about how things sort of shifted a little bit from mid 2024 to definitely hesitation in the AI space. That had followed up about a year and a half of kind of gangbusters AI fervor. Then we sort of got into around July, August of last year, right before the big sell-off in the broader market. There were these fears, right? This number one, this fear of overspending. Is that Capex sustainable, right? Is it sustainable? Is it unsustainable? The people are spending tons and tons and tons of money on this thing. So has there been evidence of the big boys slowing, those hyperscalers, those really, really big companies in the Mag 7, for example? So we look at the headlines. You get a little bit of everything. Spending slowdown will be a big problem. Then the next one is AI CapEx cycle isn't slowing down. And then big tech's massive AI capex is just at the beginning, right? So you've got opinions up the wazoo for this particular topic, and I want to talk about how some of these things are unfounded. And really, we've seen those big players say, "Listen, we continue to invest." And I think recent events with Google and the search problems that I've talked about. I've gotten a little bit bearish on Google. I'm wrong for the moment, but there's this pressure for companies that had these massive moats and are having to move their feet, right? And so we'll talk about that very soon. Okay, so concern number two, AI monetization is slower than expected. Well, that's how it goes, right? This is the investment phase. This is building, the infrastructure. It's building the foundation for what's going to come afterwards. And I do believe that we are starting to see the fruits of that work start to play out as it starts to get into different areas of the economy. Companies, industries realize that they need this. Almost any kind of industry needs it, whether it's construction, it's going to be, in the back office, those kinds of things. And then certainly when automation and robotics start to kick up, Tesla, that kind of stuff, all these great automations, which have been ramping up over the last 7 or 8 years in a big way. Really, ever since Amazon got into, what did they buy? Kiva in the early 2010s. They revolutionized the e-commerce economy. And this is going to start happening everywhere, right? It's happening in agriculture. It's happening all over the place. So those things are going to need AI as well. We'll talk about that in a moment, how AI is going to be a big part of IoT, right? Those sort of on-demand AI kinds of things, inference on the spot, as opposed to things that are done in the data center. So big things, big changes coming. So monetization is slower. The moment is upon us. We're going to start seeing that start to come to fruition. And from the perspective of NVIDIA, I think they're in a very unique position, as I'll explain, as the picks and shovels maker of this gold rush, right? This is going to be a very big thing. So one of the things, and what I like, is if we are going to be in some sort of more challenging period in markets, perhaps in the economy with higher pricing, tariffs, inflation, et cetera, perhaps slowing growth at some point, if this keeps up, it can be difficult, but AI is not going to let up, right? So in the difficult backdrop, you really need those strongest narratives. That's why I always push things like like Netflix. People got to have their Netflix. They got to have their Costco. They're things that for people that are indispensable. So the companies that can do well in good and bad times. So you really want to focus on those strong narratives. And Google, the other day, there was talk of search being under threat, which I totally still believe in. They came out very quickly with this pricey tier, $249.99 a month for their absolute best AI. Now, not many people can afford that, but what I think this does show is, number one, that they are working very hard. There's not going to be any let up in purchases of the equipment needed. Advantage NVIDIA. Second, they are absolutely not pulling back on capex, and they are concerned, right? I think this didn't take long for them to come out with this, because I think they do see a very real threat to their current kind of legacy business that's been going for 25 years. Very big threat. So on the one hand, this is positive because it shows that they're thinking about monetization. I think there's also a negative here, which is that they see that there is a big problem and they better figure it out in a hurry. They need to replace that income that they're going to be losing from their sort of traditional search. How are they going to combine ads with AI when other people don't have them? It's a very shifting landscape, right? So a very big sea change in moats. So Google not as excited about a stock like that, whereas the picks and shovel maker like NVIDIA has every advantage to this current backdrop. Now, AI fears impact on employment. They're saying it's overstated. They think its ability to replace humans is exaggerated, suggesting almost only a small percentage of jobs are at risk. I don't agree with that. I'm very skeptical of that. I hope to be proven wrong. I think there's going to be a very big impact on not just the sort of blue collar part of the economy, which is going to be automation and robots, things like that have already been hit a little bit, but very much so in the middle part of the economy, that middle class, those white collar jobs, those awful office jobs that are going to be replaced. So I'm a little skeptical of this, and this is always the argument that they trot out, that we're going to follow a similar path to, the way agriculture kind of brought people into the cities and working in factories and things like that. Very skeptical. I don't think this is quite the same thing. Geopolitical tension. So this is, of course, another thing that we're going to have to think about, keep in the back of our minds. what is going to happen from a geopolitical standpoint. These are a matter of national security in some cases. But the fact is, I think China's going to get the chips no matter what. People are going to get the chips no matter what. Um, and so it's just going to be a matter of trying to control it as much as you can. We see that some supply chain issues are going to be solved by moving some things back onshore, back to the US, into other countries. It's going to alleviate some of the risks from having everything based in Taiwan. Very, very big problems. We see TSM, Taiwan Semiconductor, starting to build some things elsewhere. So that's very, very good, but remains a little bit of a risk. So let's talk about NVIDIA specifically for the win here. Peak picks and shovels company in this space, right? The best of breed. And I believe if you put aside all the fact that they have all, the best chips pretty much, one of the big things people forget about is they have CUDA, right? This is NVIDIA's programming language. So this isn't just a hardware company. This is a software company that is getting people in via the hardware and some of the benefits of the software, getting them into their ecosystem. And once you're in that ecosystem, it becomes difficult to leave. Think of something like Microsoft Office. How are you going to give up Office? You can't give up Excel. You can't, I mean, maybe you can go to Google Sheets. It's just very difficult to do that, right? So that's why Microsoft's so powerful. They've got you. They absolutely have you. And it's very, very difficult to leave. There are these massive, massive barriers to leaving because you have to relearn something. And then once everybody uses it, right, there's this sort of network effect of once everyone's using something, why move to anything else, right? Be like going from VHS to beta. That's probably an old reference, but it doesn't make any sense anymore, right? You're just not going to have that support for the things that aren't as popular, and that gains momentum as more people write for CUDA. It just becomes the de facto leader in the space. So developers write code that only run on NVIDIA. So NVIDIA has this massive head start. Millions of AI HPC applications already built on CUDA, right? Too many training frameworks are integrated with CUDA. It makes it very difficult to move to other chips. And then again, strengthen users, it just gets more and more and more powerful. So this is one of the most underestimated benefits to NVIDIA is that they're getting ingrained in this particular AI space. So they have this massive ecosystem and moat that is getting wider and wider and wider. So they have this unmatched dominance in hardware that, of course, is contributing to the benefits from CUDA, essentially the CUDA lock-in. Explosive demand from those hyperscalers. It's game on. I think do not cut your spending because you cannot be left behind in the AI arms race. So these companies are going to be spending, spending, spending. It's going to be like having hydro. It's going to be like having electricity in your factory. It doesn't matter what they charge for it. They've got to have it, right? So there's some limitations to what I'm saying, but it is absolutely game on and the gloves are off, right? So enterprise AI is just beginning. So inference is just getting going, right? That's very big for the economy. So training is the part that happens in data centers where people are, they use all this hardware to kind of, you feed something a million pictures of a cat, and that's training. And then you show it a cat and it says, oh, that's a cat. That's inference, right? So inference is the way that we start to translate things into monetizable productivity gains in all possible areas of the economy. This isn't just blockchain being useful for a few different things. It affects everything. It affects people at home, from single individual people using AI all the way to corporations that are absolutely not going to have any choice. Upgrade cycles, right? So we're already seeing these big upgrades in 2025, huge orders from existing people, and then plus all the new people that are going to have to buy billions of these GPUs. I did a video a few weeks ago, just billions and billions and billions of these GPUs are going to be needed. And each one comes with sort of performance improvement. So again, along the theme of you can't left behind. You got to keep up with the AI Joneses and basically keep buying this stuff. Now, is there a moment like Apple where we kind of get to the point where, everyone had to upgrade up to a certain Apple model, and then at some point you kind of go, I've got sort of all the benefits. How much better a camera do I need? How much faster a phone do I need? Do I really need a couple of little extra features? So it's quite possible we'll get to that point somewhere along the ways, but I think we're very far from there. Very, very, very far from there. So think of Apple early stage potential growth, and that's where you are right now. So if you look at NVIDIA, revenue just absolutely massive, gross profit absolutely massive, gross margin starting to tail off just a little bit. That's what the bears kind of talk about, this gross margin coming down. That's possible. We could see a further erosion in that area. But the fact is, they've got their best of breed, and the sheer mass of orders that are going to be needed and that are going to come in over the next 5 to 10 years are going to be massive. Sure, there are some competitors out there. There's no question. Some of them focus on slightly different areas. Broadcom, slightly different areas. AMD is a competitor. So there's no question about it. But NVIDIA is the Uber. Other competitors are the Lyft, right? So do you want to invest in the far and away leader, or do you want to invest in the rest? So I think that's kind of the choice that you have. And it's not that NVIDIA is so absolutely unbelievably expensive. It kind of isn't, right? So let's take a look at the options here. I'm going to start with option pricing. So this is one thing I talked about in my Leaps video that I'm going to post right here or down in the description, where you can go and take a look at a very, very deep dive on how I look at leaps, how I approach them. And I do talk about volatility. I do say that, listen, it's important, but it's not as important as people think. People trot out this, well, the longer term, the longer an option's lifespan is, the higher Vega becomes, the higher the Vega is, and the more important it is. It's not really in practicality. It's kind of one of those textbooks versus reality, right? So, but having said that, I really like to see that longer term pricing. So this is 1 year pricing on NVIDIA options, and the 2 year prices look basically the same. Look how much they've come down here, right? So if you get into those leaps, you're getting exposure to this. And this is the in the money, right? So I'm not taking the at the money. You want to be able to look at in the monies, out of the monies, at the monies. You want to have kind of that full picture of what's going on, because skew can kind of mess with pricing a little bit. But very, very cheap, coming off the very, very recent lows. But I think that's very promising, because when you have that Vega exposure and you're at extremely low prices, you have less Vega exposure to the downside if it drops more, but you do have all that upside in case things go up. It doesn't play as much into an 80 delta call leap, because as the stock goes up, that skew, you're basically riding the put skew at that point. It's kind of confusing, but that money call is basically mimicking the sort of out of the money put skew. So it's not, it isn't that important. If anything, you're going to benefit from sort of those getting even more kind of implied volatility embedded in them, which is one of the nice things about leaps. And even on the way down, if things kind of collapse, you get that explosion of volatility that actually gives you just a little bit of a benefit as time values expand and you're long those things. So you could have the stock drop 30 bucks and you're going to get this explosion of volatility that can actually help you out. So I'm not saying Vega is not important, but it kind of is going to kick in. On the outset, it's not super important to us. So let's take a look at the options. Okay, so here we got NVIDIA. Basically, we've had this massive breakout from the low 90s, high 80s, breakout through this wedge here. Beautiful, beautiful, passing these highs from back here. I started to get in around 117. If some of you have been watching some of my shows, 117 started to get bullish, and I've been adding a few leaps along the way here. So what I would look at, I think this thing's going to probably head into the high 100, so maybe 180, et cetera. If the earnings are very strong, we could get a gap up and then a continuation. If the earnings aren't good, then we're going to have to really evaluate, figure out, is this a trend? Are we seeing a trend? Are we truly seeing the slowdown, right? My base case is that we are not at all seeing the slowdown, but anything can happen on earnings. But some people think you don't buy leaps before earnings. I don't have a problem with that if it's one of my best ideas. As I mentioned earlier, it's got to be one of your very, very best ideas. I'm not playing this for a swing trade. I'm not playing this for a 3-day trade. I'm not trying to, there's really no Vega exposure at these expiries. So there's no, some people say, oh, you're going to get hurt on implied volatility coming down after earnings. That's kind of nonsense. So if we look at something like, let's say we look at a June 2026, what I want to look at is maybe go out to maybe an 80. I like to kind of target that 75 to 85 delta. So if we look, a 75 delta would be at around a 115, a June 115 call. Now you can kind of get an idea a very rough idea at this length of expiry by looking at the put. The put is kind of the time value in there, but in reality, we've got another $6 or $7 of time premium of extrinsic value in the call side, right? That's because of the carry that figures into the formula for calculating options. You've got to have the puts are going to be a little bit lower because of that carry, which doesn't come from a dividend, but comes from the risk-free rate, right? So if you sell a put, you can put your the pile of cash in the bank and make your risk-free rate. That's why the put is lower, basically, is one way you can think of it. So I might go sort of 80 delta. It's going to bring down that time value. So the further in the money you go, the less time premium you're going to pay for this particular option. However, the more expensive the option is going to get. So there's kind of this balance between, well, I don't want to get super, super low because starts to it starts to get expensive, right? The option's expensive, and it starts to negate some of the advantage that you really want, which is I want to be able to control 100 shares of NVIDIA for a lot less money. If I start buying like a $60 call, then I'm buying something that's so far in the money that at some point I might just say, well, I just kind of want to buy the stock. But so I kind of think that 80 delta is kind of a nice happy medium there. So you get into something like this, maybe a June 2026 105 call for about 43.90. That's going to give you a little, you're going to have a little bit of time value. But again, you have to understand what you're in this for. We saw that the option pricing is very, very low. So number one, that's a nice bonus at this point. If it weren't absolutely in the basement in terms of pricing, would I still be interested? Yes, I would be, but that's an absolute bonus in this particular case. So you kind of want this position for a longer term explosive move. So even if you had a little Vega risk, and I go into this in the full video on leaps, is you really are looking for delta to help you out here, right? That's the Greek that you're really kind of focusing on. The Vega maybe can hurt you a little bit. I don't think it will in this case, but it could hurt you a little bit. The delta is really what it's all about. So with an 80 delta, that's going to improve over time as the stock goes up. It's going to become an 85, a 90, 95. Eventually, this thing's going to move just like the stock. And then at that point, you can decide, is it moved far enough that I'm going to monetize something like this? So I think there's a pretty good chance that if I buy like a 105 for about $45, I think there's a fairly good chance that you could triple your money on this thing. So I think Nvidia could probably go to about 250, at which time this is going to have almost no time value on it at all. Now, at some point, you may want to take some of the delta off of that, right? You might be up a lot of money, and you might want to kind of roll that call up. So we could talk about that in another video, but there are ways that you can kind of keep the party going without getting out of the position entirely, which I think is very important, right? When you latch on to a good theme, a good story, you start doing well on it, a lot of people just kind of get out and they sort of take their profits fast, but they let their losers run. And of course, we know that that's never the right way to do things. So once you start getting some momentum, you want to kind of let it run if it proves true that this leg of AI is just really getting started again, and there's going to be a fever for AI throughout the economy over the next few years, right? So that's kind of the play that I'd be looking at right now, probably about that June 2026 105. If you want to get away with maybe a little bit less of a cost, you could go to the March, sorry, that was a 2026. You could go to a March 2026 instead of a June 2026, and you could pick up that 105 call, which is still about an 80 delta, right? You'll notice over time the deltas kind of converge to the same because it's the longer you go out, the less the more you get a smoothing out of deltas because it's a bit more of it's so much time that anything can happen. So the 105s you get in at $41. So about $41, I think you could easily sort of turn that into a 3x there. And so I think that's a pretty interesting trade. So instead of buying 100 shares of Nvidia at 133 bucks, which is going to cost you 13 grand, you can get the similar control of that amount of Nvidia for about $4,100. So that's kind of a nice thing. That's really the big thing. Now, to my point about not overdoing the leverage, what you typically, if you're going to be conservative and use leaps in a conservative way, I'm not saying, I mean, anybody can do anything they want, but some people might look at this and go, well, for a third of the cost, I can afford, 3 of these, right? So, but that's called leveraging up, right? You still have risk to the downside. For me, a leap is interesting because if I'm completely wrong and the stock pulls back 50 bucks, I'm not going to lose much more, or if anything, if not more than I put into the call. That to me is the proper use of leverage. I get to sit on a whole bunch of cash that I normally would have had to put in NVIDIA, but I get the leap instead. If you start levering up and kind of going, well, I can afford three of these now. Well, then whatever you were originally going to put in, $13,000, you put all of that at risk on a 1/3 move down or a 40% move down in NVIDIA. So that's definitely very, very aggressive if you're going to lever up. But the way that I like to use them is as a way to kind of get that leverage, have that money. If other things are going on in the market, other opportunities, now you have this cash sitting around to perhaps get into something else. And that's a powerful thing that you get with Leap. So hopefully you guys enjoyed that. And I'll be doing a whole bunch more of these because there's a whole bunch of names out there I like. So remember, like and subscribe. Check out my programs in the description, and we'll see you next time.